Today is Sunday, September 8th, and this is another update on my progress beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I decided not to make any position changes to my portfolio, so everything's going to be exactly the same. So this is what the SPY chart currently looks like. On the last update, the S&P 500 had closed right here, which was just below the all-time high, and at the time, everything was looking perfect. The SPY price was above the 5-day and the 15-day, but then it completely reversed. In the last 4 trading sessions, it's seen a decline of 4.21%. So at this point, it's a complete opposite of where we were at the last update. The SPY price is now below the 5-day, which is below the 15. The market's definitely been sporadic since it reached its all-time high on July 16th. After making those new all-time highs, over the next couple of weeks, the S&P 500 dropped over 8%, and then it seemingly spent the next couple of weeks fully recovering, and now it seems to be going down just as fast as it was towards the middle of July. I went ahead and zoomed in on the SPY chart. I also changed the 15-day moving average to the 50-day moving average, which is represented by this black line. I talked about in the last update that when the 50-day moving average was approaching this trend line, when the markets were making new all-time highs back in the middle of July, it wasn't able to stay above it and gain any further momentum, which was the same exact time that the market started to see its declines. This right here is the moment that the 50-day moving average broke above this trend line. During those days, the market declined, but not as much as it ultimately would. So for situations like this moving forward, once the 50-day moving average reaches the trend line that I think it's going to go through, I'm going to keep a close eye on it, and as soon as it seems like it might have a chance of retreating back downwards, I'm going to put some of my portfolio back into cash, because by doing that, I still would have saw this decline right here, but I would have saved myself the second decline, and it seems that's exactly what's happening right now with the current 50-day moving average. It came super close to hitting this trend line, but it wasn't actually able to ever reach it. So if I had used the strategy that I had just talked about, on Thursday by market closed, I should have put some of my portfolio back into cash, which would have at a minimum saved me Friday's declines and any possible further declines. Moving averages don't move that sporadically, especially if they're longer like the 50-day moving average, but you do at least always want to see them moving either up or down, because if they're just moving sideways, that means that they're losing momentum, which is exactly what happened leading up to Thursday's close. And then with Friday's declines, it actually moved it to a slightly downward position, so it wouldn't surprise me if it finished the cycle and ended up touching this trend line down here again. Since I missed my opportunity to put some of my portfolio into cash on Thursday, I think it's best that I just keep holding everything that I have. They say time spent in the market is better than trying just to time the market, and if the 50-day moving average is going to retest this lower trend line before ultimately bouncing higher, it shouldn't take that much more declines to get there. If I thought that the market was actually going to go into a complete free fall, I would definitely put some of my portfolio into cash, but I certainly don't think that's the case, especially with Jerome Powell's next Fed meeting, which is going to be Wednesday, September 18th. It's definitely safe to say that there's going to be a rate cut at that meeting, but it's going to be important to listen to what he says about future rate cuts, because there's a possibility that what he says is that we're just going to have this one rate cut in September and we're not guaranteed another one, or there's the possibility that he says we're going to get this rate cut in September and then he expects additional rate cuts either by the end of this year or going into next year, in which case that should drive the market a lot higher than what it is right now. This is the first page of all my current positions, which is showing 13 out of 17. My top 5 holdings are Costco, General Electric, Apple, Goldman Sachs, and Amazon, and those 5 make up 37.14% of my portfolio. Apple and Costco with a 17.35 and a 10.37% gain are still my 2 biggest winners. A lot of the mega cap stocks like Amazon, Google, Microsoft, and even Nvidia have fallen quite a bit over the last couple of days. C3AI reported their earnings the other day, and it opened up pretty big in the red, but it was able to gain some of that back throughout the day, so I feel confident that there's a possibility that it does recover. I found that if a stock opens up in the red and then it continues to go further down throughout the day, that's definitely not good at all. But if a stock opens up big in the red and then spends the day slowly climbing back out of it, that's definitely an encouraging sign. And this is the second page showing my remaining 4 positions. Right now, I have 98.16% of my portfolio invested, with 1.84 sitting in cash. Since my last update, the S&P 500 saw a decline of 4.21%. My portfolio saw a loss of 5.24, and Pershing Square had a decline of 6.29, which brings this year to date, the S&P 500 has a gain of 14.03. My portfolio is at a gain of 11.14, and Pershing Square on the year has a gain of 1.96. That's all I got for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.